Last week, Reuters ran a story wondering if the Saudis are going to be, in the near future, flooding the market to drive down prices and take more market share because they see that peak oil demand has arrived. They want to maximize their returns. To talk about that scenario, was it plausible or isn't it plausible? We're going to be talking to Judith Dwarkin from Enervis. So, Judith, welcome to the interview.
Thanks very much. Glad to be here.
So what do you make of that scenario? Is it plausible?
Well, I'm going to give you a two-part answer. In the short term, the Saudis are not interested in producing more. They're interested in producing less because the world is under a huge overhang of excess stocks that have accumulated because of an epic collapse in oil demand related to the pandemic. They've gathered together a bunch of collaborators to help them with that mopping up exercise. In the longer term, I mean, from the point of view of economic rationality, it makes sense. If you think the demand for your resource is going to be, at best flat, and the value will be limited, then you will want to monetize your resource faster. As to whether or not the Saudis will do that and how they will do that, whether it be a dramatic change in strategy or they're going to increment their way along, is a completely open question at this point.
So let's assume for a moment that they do at some point want to monetize their declining resource or the declining demand for their resource. And where does Canadian oil fit into that? Are we competitive in a low price environment?
Well, it depends what you mean by low, but certainly in the the $50 maybe to $60 range, some SAGD projects can hold their own against certain U.S. oil shale economics. Oil sands mining, particularly new mining ventures that aren't just add-ons to existing mining ventures, are kind of out on the end of the limb if that's a sustained price for the longer term. But certainly existing mining operations can kind of meet their variable operating costs at that price. But generally speaking, Canadian oil sands are towards the mid to high end of the global supply stack in terms of costs.
What about conventional oil?
Conventional oils, you mean oil coming out of vertical wells? Well, that's basically what Saudi Arabia and all the Middle Eastern, all basically OPEC producers produce. And Canada's sort of production of that has been diminishing over time. And that's why we've turned to the oil sands, having much greater resources available of that kind of stuff. Similarly, in the U.S., the bulk of the growth, the bulk of the future growth is going to come from what we call the unconventional side, or shales. Certainly, conventional oil more broadly around the world, whether it's onshore or offshore, will need to replace what we call natural declines, we think, even in a low demand growth kind of world, because even if OPEC liquids supply 40% of the market, there's still 60% of the market that has to be met by non-OPEC production. And even in a flat demand world, you need to keep replacing those sort of inexorable natural declines with something. So we still have to have activity in those non-OPEC areas, be they unconventional or conventional.
Final question, Judith. I'm curious about your take on the many public comments from Alberta politicians and industry leaders that don't worry about the future. There's always going to be some demand for oil, and we're okay. We don't have to, there's no panic to adapt to the energy transition because there'll always be a demand for what we dig up and ship out on our pipelines. What's your take on that?
Well, regardless of whose mouth that kind of prognostication is coming from, and there are some major oil companies as well who hold the view that oil consumption is not going to become extinct, and it likely isn't going to become extinct. I think in the end of the day, the world will be consuming maybe a broader mix of primary fuels, but there'll still be a niche for oil. To date, I'm not aware of any viable commercial substitutes for hydrocarbons in the production of plastic, for example. In the transportation sector, which is kind of one of the last bastions for oil demand, we are seeing the take up of non-liquid substitutes. But again, it's going to take some time for all of those to displace oil consumption. And we're talking decades, not months or years. That said, I think the general consensus is in terms of future growth, oil will be a less favored fuel, as will the higher carbon fuels like coal in terms of meeting future energy demand needs. But yes, I think it's probably fair to say that there'll always be some oil consumption. And the question is, who will be providing the supply to meet that consumption? And some of it will depend on, well, the lowest cost provider, the provider that produces the least, carbon intensive fuels. And some of it will just be logistics. Canadian production happens to be right next door to the world's largest oil consumer, which is, something to reckon with still.
I've been arguing for a long time now that we don't know the answer to these questions, but we can see, I think, that particularly from my point of view, the 2020s will be a disruptive decade for global markets. And the prudent strategy is to assume the worst case scenario and at least begin preparing for that. Do you think that that's a reasonable argument?
Yeah, minimizing risk as opposed to is one strategy for sure, and it does seem to be a prudent one, and we're seeing that in many major oil companies around the world are diversifying, moving to diversify their portfolios, and even Saudi Arabia is moving to develop its natural gas resource more energetically, both to meet domestic demand and potentially to export the stuff. They're investing in oil efficiency technologies, in carbon capture, sequestration, all those kinds of things to try to be positioned for a world where it, of course, will continue to be turbulent. We don't know what the ultimate outcome will be. But yes, so I guess, yes, a prudent strategy is to plan for unpleasant surprises as to just hope for the pleasant ones.
Judith, thank you very much for this. Really appreciate it. Happy belated Thanksgiving.
Oh, you're more than welcome. It was a pleasure talking with you.